Hi, this is Darren from Macquarie Warrants Singapore and welcome to another episode of Macquarie Warrants Market View. In this series, hear firsthand from Singapore's investment strategies as they share their views on markets in the coming weeks. For this episode, we have Con Hao, Director of Wikipedia and SGX Academy trainer, who will share his views on trending Hong Kong stock names.
We have all experienced a very interesting September, especially in the tech stock globally. We could see at the beginning of September, Nasdaq is starting to get volatile. Volatility, it may not be a bad thing, provided if we are not passive. Volatility bring forth opportunity when we can identify them. Let's turn our attention to Tencent. At the close of September, it was also the close of the third quarter of 2020. What can you see? I have identified this as an inverse hammer with a high weighting. Let's go back to 2018. I have spotted something very similar for you to do a case study on. At the close of its first quarter, I have identified an inverse hammer with a high weighting. Since then, the market had a healthy correction. Therefore, for this current inverse hammer, studies indicated a potential peak for Tencent. And for the coming weeks to months to come, I should be looking out for shorting opportunities. Next, I too find JD.com listed in Hong Kong interesting. This is a weekly chart. I too have identified an inverse hammer with high weighting at the close of the first week of September. And since then, it has been trending lower. The overall tech stock sentiments are indicating potentially more downside. Therefore, for JD.com, I will be also looking out for shorting opportunity in the coming days to weeks. Stay safe and have a profitable weeks ahead, and always have a measured risk.
I hope Con Hao's insights have provided you with actionable strategies to trade the current market. Investors keen to trade Tencent and JD.com stocks in the short term may consider doing so via warrants. Call warrants move in line with the underlying they follow, meaning if the underlying stock or index went up, so will the call warrants. Put warrants move inversely from the underlying and will increase in price when the underlying stock or index falls. Hence, in the case of Tencent and JD.com, put warrants can be used to trade potential downside moves. Despite the staggering highs reached by tech stocks in the earlier months, we saw a sharp pullback in the earlier half of September. In just 7 trading sessions between 2nd to 9th September, Tencent shares sunk 7.5%. The table shows a direct comparison with warrants over the same period. While Tencent shares are traded in Hong Kong dollars on the Hong Kong exchange, the warrants tracking the share price moves of Tencent are traded in Singapore dollars on the SGX. The call warrant fell 41%, whilst the put warrant saw a 42% gain compared to the 7.5% decline in Tencent. This magnified move in the put warrant is due to the effective gearing feature embedded in warrants. A warrant's effective gearing figure refers to how much more a warrant may move in response to the moves in the underlying they track. If a warrant had an effective gearing of 10 times, it means the warrant will move around 10% for every 1% move in the underlying share or index it tracks. The gearing effect is one of the reasons that make warrants popular, but notes that gearing can work both ways, meaning warrants will also move in a bigger magnitude or percentage change than the percentage change move in the underlying should you get your view wrong. In this second example, we track JD.com's downtrend mentioned earlier by Con Hao, where the share price dropped 3.5% between 23 to 25th September. Consequently, our JD.com put warrant LWYW gained 19%, while JD.com's call warrant DYPW declined 24%. Both warrants again moved more than the underlying shares due to the gearing effect. With volatility aging upwards as the US presidential election approaches, investors may catch potential short-term selling opportunities via put warrants on these two stock names as covered by Con Hao. Listed on the SGX, warrants allow Singapore investors to gain exposure to Tencent, JD.com and other international blue chip names. Today, we're pleased to list new call and put warrants tracking even more Hong Kong stock warrants that includes Meituan, Geely, Sunny Optical and BYD. This adds to our current list of Hong Kong warrants over Alibaba, Tencent, Xiaomi, JD.com, and NetEase. Finally, Macquarie Warrants is rewarding 7 investors with $1,000 this month for those who trade in Hong Kong stock warrants and made realized gains of 20%. As you can see from the above examples, it's not difficult to achieve more than 20% gains with warrants. Log on to warrants.com.sg to find out how to submit your warrant trades to win. So how do people trade structured warrants? Listed on the SGX, structured warrants can be traded via your brokerage account just like how you trade shares. Meanwhile, warrant issuers like Macquarie provide continuous warrant buy and sell prices to ensure that warrant investors can easily enter and exit from warrant positions. So, contact your broker to start trading warrants today. For further details on trading warrants and to find out if you're qualified to trade warrants, click on the link in the description or feel free to contact us at our warrant hotline. Lastly, don't miss out on the next video and exciting warrant news by subscribing to our channels on YouTube, Telegram, and Facebook.